Perfect. Welcome, everybody. Today, we would like to talk about, yes, the FTX debacle to some degree. It fits very nicely with the topic we had scheduled anyway. The original topic was DeFi. Where are we standing right now, and where will we grow from here? I think it's pretty clear by now that, yes, regulation can help grow the space, but also the self-hosting of assets can help the space. This goes hand in hand with DeFi, for example. That's what we will talk about, because despite all the turmoil with regards to FTX, one is pretty clear. The networks, the decentral networks, have worked very, very well. This applies to Bitcoin, it applied to stable coins, it applied to Ethereum and all other chains. So every 10 seconds, Ethereum produced a new block, regardless of there was turmoil in the market or not. So this really is a very, very big plus point for the technology, now proven multiple times. We had the same discussion in May after the Terra Luna crash. So to some degree, decentral technology can really help here, especially when it's better compared to bad regulated companies with very unprofessional management and so on and so forth. That's the topics what we would like to talk about. Then ending with the questions, where will we grow in the DeFi ecosystem from now on, covering the next years. And with this, I would like to hand over now to everyone here in the room with the question to please present yourself briefly and also the company you're working in. Who wants to go first? Jonas, would you like to go first?
Yes, please. Yeah, Philip, thank you so much for the introduction here, and thanks for having me. I'm Jonas Thürmann. I'm the founder of Lock. Lock is a retail and institutional staking provider, so for B2C and B2B. And our differentiator is a little bit that you can choose how you want to receive your return. So in the end, how you want to receive your staking rewards. You can be completely flexible here. You can choose whatever asset you like. For example, you can stake and receive native Bitcoin here or native Ethereum. Also, like a lot of assets on the DeFi chain protocol are available, like liquidity pool tokens, because I'm building on top of the DeFi chain protocol. And also stable coins, for example, to cover the tax when it comes to staking. And also cash into your bank account. And I have a global availability. I just launched the staking provider 2 months ago and went live 3 weeks ago. So pretty young startup here. And I mentioned earlier that I'm building on top of the DeFi chain. DeFi chain is the DeFi protocol on top of Bitcoin. So enabling basically DeFi for Bitcoin. And it was launched in May 2020. That's basically all about Lock. It's available in different wallets, so it's not one application or one wallet. It's really built into different wallets, so enabling the full flexibility here for the user and also for the companies that want to stake at Lock. Before that, I was helping to build up DFX. DFX is a fiat on and off ramp. In order to found Lock, I left DFX. And before that, I was studying blockchain technologies at the Ziggurat Institute. Some of you might know the Ziggurat Institute. It's a corporation or a cooperative master between the Ziggurat Institute and the University of Barcelona. And I gained my degree there in masters or global masters of blockchain technologies.
Excellent. Speaking about DFX, let's directly hand over to Ollie, who works at DFX and has, I think, co-founded it, right? So Ollie, please, more information about you and your company.
Hi, Philip. Yeah, hi, everybody. Thanks for having me. I'm Ollie, co-founder and CMO of DFX Swiss. So DFX is a Swiss-based fiat to crypto and crypto to fiat on and off ramp that allows retail and corporate investors to buy into crypto assets or to sell crypto assets back to fiat with just a fingertip. We started with a service about a year ago to become really the seamless gateway between fiat and crypto, and to solve what I think biggest blockers for mass adoption, which is just this convenience and simplicity combined with the financial self-determination of everybody. And how do we mean that? So we are really the direct tunnel between your bank account and your non-custodial wallet. So when you buy and sell crypto through DFX, you have no need to register on a central exchange, do KYC with them. I guess when you are an institutional investor, you know how headache that could make. Yeah, that's DFX and Ollie.
Perfect. Welcome. Then, Clara, would you like to briefly present yourself and Kaiko?
Yes, absolutely. Thank you for having us. My name is Clara. I am the Director of Research at Kaiko. Kaiko is a cryptocurrency data provider. Today, we collect data from more than 100 centralized and decentralized exchanges. We also produce quantitative analytics, have indices, reference rates, and produce our own research. So we've actually been heavily covering what's been happening on both centralized and decentralized markets in the aftermath of the FTX collapse. So looking forward to sharing some data and insights on that today.
Exactly. Happy to hear these insights myself. We didn't talk about them yet, so I will also listen very carefully to learn about these insights. And finally, we have Julian here from Solax. Please also present yourself, Julian.
Hi, Philip. Thank you much for having me on this panel. I'm currently building with my team our own DeFi project called SolarX. It's a decentralized exchange based on the Solana blockchain. We are also aiming to build a multi-chain DEX, and we are quite heavily connected with the Solana ecosystem since we're building on the Solana blockchain. And we are also very happy part of the Frankfurt School of Finance Blockchain Center since our start of our entrepreneurial journey.
Yeah, basically, thanks to everyone here. You know, you are supporting the Frankfurt School. Blockchains are also partly financially. We do not get any money from government, so therefore, it's those companies like you which allow us what we are doing. Thanks for this. And by the way, small side remark: Julian's audio quality is a little bit affected. He is on a conference, took the spare time, went in a separated room. And therefore the quality might not be TV style, so to say, but it's still good enough for our presentation, and therefore happy that you could make it, Julian. He's on the Berlin conference called NXC, something like this, a large-scale Berlin conference currently. Perfect. Let's get started. So first of all, let's talk about FTX for some seconds with the context of also DeFi and the tech. What happened? I think that's pretty clear. We don't have to recap on this, but what's the implication now for decentralized finance and centralized finance? Who is winning? Is there some kind of battle going on? Are there multiple models winning in the future? Regulated DeFi, regulated CeFi, DeFi, and DeFi. So what's your feeling here? Who's going to win? What tactics will work in the future, and which tactics will not work? Anybody wants to give this question a start?
I can start first.
Please.
Yeah, I think the FTX collapse really showed the severe limitations of centralized crypto finance as a whole. I think in the immediate aftermath, we already saw that trade volumes on decentralized exchanges have surged a lot. On Uniswap, volumes almost approached all-time highs at more than 4.8 billion. Today, it's actually one of the, I think it's in the top 3 of cryptocurrency exchanges by volume globally. That is to say, though, that there was a severe drop in liquidity on both centralized and decentralized markets. This is because the whole FTX collapse really impacted a lot of market makers, and especially in crypto, market makers will often deploy capital on both centralized and decentralized exchanges. So there's been a similar impact on the total value locked in DeFi protocols as what we've seen on centralized order books. Hopefully that's just a short-term trend. And in the long term, I think we actually can predict that either Uniswap or a combination of other decentralized protocols will really take a significant amount of market share that FTX once had, specifically when it comes to swapping assets. We still need to see, though, when it comes to regulation, whether the regulators will actually target these protocols, but I guess that's for a different topic, hopefully later on in the webinar.
Yeah, that's an interesting point. We saw what the regulator has done to Tornado Cash, but you know, whoever is using Tornado Cash as a protocol might indeed have something to hide, you know, potentially, right? You couldn't argue in the same way with Uniswap. You know, whoever uses Uniswap doesn't have something to hide or something like this. He just wants to trade tokens. So therefore, I think it's another case. But it will be very, very interesting how the regulator approaches DeFi in the upcoming months, especially when you see people taking their crypto assets off exchanges. So they are moving this potentially in parts to the decentral world, right? Who else wants to give it a question or an answer? Talking about CeFi and DeFi, who's gonna win? Which tactics are growing?
Yeah, I can go next here to share a little bit my view on this. And because you mentioned the regulation, Philip, my fear at the moment is a little bit that the regulators don't really understand what actually happened. And we as an industry as a whole really need to just stand up here and really work closely together with the regulators here to really achieve a sophisticated regulation. I'm not against regulation, but we really need to stand up here and fight for crypto, for DeFi, because in actually the cases, if there would be everything transparently happened, that if the FTX like on-chain, this would never have happened, right? So we should really keep that in mind and don't over-regulate the sector here, just because like an offshore exchange did something completely wrong. And my conviction is here, this would have happened anyway, even with regulation, because it was criminal energy. I mean, you could speculate if SBF was aware of it, but anyway, in the end, it was criminal activity. And in my opinion, no regulation would have helped here.
Yeah, I'm moderator here, but I would like to be panelist now for one argument I had coming up in the last couple of days, because the following I think happened. Over here in Europe, we don't have so much FTX damage because we had regulators creating quite, not perfect, right, but here and there quite good rules, such that we have even Bitcoin ETFs over here in Germany, Switzerland, and Europe, such that in case people want to invest, there are buckets where people can invest. You know, crypto exchanges in Germany, we have Bison, Bitpanda in Austria, Bitcoin ETF, Ethereum tracker, and so on. So people can invest, and regulation allowed to create buckets which then funneled the money from investors into the ecosystem in a quite safe way. But now look at the US. That's a very interesting point, because the US has always been a little bit hesitant for creating a very clear regulation. We know that there is still no Bitcoin ETF out there. So what happens now in case people want to invest, then people will invest. But in case there is no Bitcoin ETF and other secure vehicles to invest out there, then they will go elsewhere. And where do they go? To a company called FTX, which has put their logo on a stadium, right? So it's not necessarily the regulation itself which makes the entire ecosystem safe, in my opinion, right? You might dispute what I'm saying, of course, but regulation is creating buckets for people such that money can be funneled in a safe way into this ecosystem. And this could not happen in the US. So you have this kind of money flow wanting to be invested in the US, but there is no ETF style of product which allows it, for example. Then money flows elsewhere. And then you had these all kinds of not perfectly regulated companies. You know, Grayscale is a workaround, BlockFi, Gemini is not perfectly regulated because regulation is not there, right? No Bitcoin ETF, and so on and so forth. This then has led to this spillover towards not perfect vehicles, right? What do you think about this opinion, or at this interpretation, you know, of regulation? Anybody wants to comment on it? Maybe Ollie, as an on-ramp and off-ramp with regulation in mind.
Yeah, so I can just totally agree here with you. You've asked the question, who will be the winner, who will be the loser? I really think it depends of the players understand that real crypto, real DeFi has nothing to do with FTX, Alameda, or 3 Arrow Capitals. So it's just the case that people are not well educated or not educated enough to store their seeds and their keys themselves, or if they are just too lazy for that. And I think winners will be custodians who are very transparent. So transparent all the way, so that they really show their proof of funds, that they are just transparent to the customers. And I guess, Jonas, maybe you can also touch on that, because that's something you currently built with Flock, where everything is very just transparent, or the other way around, where you really do not want to trust anymore on on custodians where you really want to have your keys at any time. And then there maybe are on and off ramps who deliver the funds directly in your non-custodial wallet. So when we talk about the funnel or the bridge between the fiat and the crypto world, and I guess there will be this CDeFi aspect, which is very central, very transparent, where people understand, and especially institutions understand where their funds are at any time. I guess that will be the key point in the future. And for also other corporates who maybe are a little bit beyond that, want to really have everything under control, they have to use vehicles where they can have their seed phrases at any time, and then they have to be educated how to store them safe and well.
Yeah, maybe just to add 1 or 2 points here. So I think the short-term effects are super bad here at the moment, right? I mean, a lot of money was lost, a lot of investors lost money, but I think, and anyone would agree, I think here, is that the long-term benefits are quite significant here after this FTX collapse. So now the industry is really under pressure to really offer this transparency to their customers if they want to be successful in the end. And I think that's a huge win for the entire industry, right? Because the customers, and especially the retail customers, are now demanding this transparency and that they always know where their funds are. And DeFi can deliver that. So I think, of course, the short-term effects are super bad at the moment. A lot of money was lost, but in the long term, it was a huge win for the entire industry. Actually, I don't think that that's a loss for like any custodians here. I'm still convinced, and that's why I'm building a custodial service here, that many users just want this support when it comes to investments, right? They don't want to manage their own investments completely on their own. Many people just don't want that, and they still require this additional support when it comes to their investments. And I think custodial services that are fully transparent, where any funds, any movement of customer funds can be tracked and traced anytime, 100% transparently via blockchain transactions, that's the future that any custodial service in the crypto space needs to go, and Lock does the same.
Yeah, interesting point. Julian, you're collaborating with a decentral exchange. What's your opinion on all this?
Regarding the question, who's the winner, who's the loser, I can say so far, I mean, the losers in the past and also right now in the whole FTX disaster, I would call it, is always the retail investor. The retail investor is in the most cases always the backholder. And I think the best way to address this is really to push education regarding crypto, regarding DeFi, and to avoid this abuse of power like Sam Bankman-Fried did, this centralization of power. And I think it's also very, very important to come back to the core values of crypto. It's like basically autonomy, self-autonomy regarding every aspect of your financial life, and also like autonomy from the state to some degree. And I think you have to come back to these core values and to educate people to make them actually fit for mass adoption. I think what we experience right now is very, very bad, like in a second for the industry, like the whole sentiment is bad at the moment. But in the long run, like Jonas already mentioned, it will help us so people will like take their finances again in their own hands. I think that's a huge benefit in the long way, but currently we are facing this very, very bad sentiment for the whole industry, obviously.
Yeah, indeed, I would perfectly agree. Okay, now let's basically ask about the implications financially. Maybe Clara, you can give us some insights from the analytics part you did.
In terms of overall market structure, I mean, assets are down a lot, like most cryptocurrencies. There's a lot, I think, of liquidations that will probably take place too. as funds that are forced to shut down will probably will need to sell on the open market a lot of their crypto assets. When we're specifically looking at DeFi, we still are seeing activity on decentralized protocols. I think lending protocols is what will be interesting in particular, because a lot of what happened, especially with the FTX collapse, but also with Genesis and the overflow with that, Genesis is one of the large centralized lenders, is that these centralized lending parties have really been the ones that have disproven the model of this CeFi lending, because especially what happened with the crypto credit crisis back in June, we've just seen a wave of lenders go under. But in DeFi, we are seeing that the lending services there are operating just as they were supposed to. And so the issue started, though, as these centralized lenders used these decentralized lending protocols. It's when you have the interaction between CeFi and DeFi that's when problems arise. It's when the CeFi providers were using their customer funds in risky DeFi protocols. So again, back to the point that it's not really the DeFi protocols themselves that are creating this risk. It's more what happens when the CeFi services are interacting with them. And so I think we'll probably see an increase in DeFi lending, but it's still not solving the problem of over-collateralization of loans, which is something that makes DeFi more inaccessible to the majority of people, in that you still need a lot of capital to get started.
Yeah, interesting points. Anybody wants to add something here from a quantitative part, or otherwise we would just proceed with more details on the current status of DeFi. Anybody wants to produce a remark? Please go ahead. Okay, then let's move over to basically talking a little bit more about where we are with DeFi. DeFi has basically increased dramatically since the so-called DeFi summer. That was 2020. That was the first Corona year, so to say. And many projects popped up, many new layer one projects pop up. And the way I see it is always the following. You have multiple functions of the capital markets, such as lending, borrowing, a stable asset like DAI, you have trading, you have derivatives, maybe insurances, and then you have the layer ones, that's Ethereum, Solana, this and that. So it spans basically a matrix, and this matrix is basically in each cell filled by projects, yeah, like one function of the capital market on one layer one. So for example, we have Julian here now working on a DEX solution on Solana. That's basically one of the cells of this matrix, and this matrix also tells us that many projects have been founded, and especially in the DeFi summer, a lot has happened there. Since then, it has here and there apparently become a little bit more calm, but I think this impression is wrong, because on the background, people are really working on many projects multiply. We also see hacks in the media, yes, but still, once again, on the background, people are still keep on working. So at some point of time, there might be all small bugs removed, and this entire system is getting more solid. That's basically my take on what's happening here. And I would like to ask every one of you now, where are we staying or sitting with DeFi right now? Please specify whether you're talking about a retail investor or retail people participating or institutionals, because it's very different segments. So we have to give the right context there to see to be clear of what we are talking about. Who wants to get started? Maybe Jonas. Would you like to get started?
Yeah, of course. Yeah. So I totally agree on any of your points in the introduction of this question. I think especially bear markets are building times, right? Everyone knows that. And we actually see that in the number of addresses. So probably these number of addresses, or the amount of addresses in DeFi protocols are mainly more on the retail investor side. So like at least on the DeFi chain protocol, we see like a massive increase, although we have like a massive bear market at the moment. So at the moment, there are way more than 100,000 addresses, and mostly the majority of them comes from retail investors here. And I have like seen like a lot of data that shows that it's the same in other DeFi protocols. I think the current state is that we lost a lot of trust in the last couple of weeks and months, also in DeFi. Although actually the problem was not DeFi, we talked about it earlier. But I think once we are coming out of this situation, out of this current market environment, I think there's a very bright future for DeFi. And now really it's time to improve all the protocols, all the flaws, all the bugs. And I think we can see it in the Ethereum ecosystem as well. I mean, I don't have the exact number in mind, but there are like thousands of developers are actually working on DeFi protocols in the Ethereum ecosystem. And this number just keeps growing.
Perfect. Makes very much sense. Maybe Oliver, you want to add something?
Yeah, thanks, Philip.
Okay.
Yeah, so yeah, as you introduced that, right? So we have everything in place, right? So back in 2017, when all this DeFi thing started, we have those concepts of lending, of staking, of NFTs. They have already been there. Also, Uniswap back in 2017 was there, but there was just no liquidity, no trading. And in this cycle, we came up with using those tools. And I guess moving forward, it is for the next cycle to use them in a better way. So become more useful to really combine different DeFi topics. For example, building DeFi around NFTs, for example, and building really an ecosystem there. I guess that's something that will thrive DeFi in 2023 and beyond.
Yeah, I would also agree. And then let's move over to Julian. Please also provide more insights into where we are standing right now.
Yeah, I can happily tell you what's going on.
But Julian, please also tell us, are you talking specifically about the Solana ecosystem or about the entire ecosystem? We have to also provide here the right context.
I would start with the Solana ecosystem. So I was visiting Lisbon, start of November. I was attending Web Summit, the Hackathons and Breakpoint. And it was the time when the whole FTX debacle basically unfolded to the tweets of the Binance founder. And basically, I can say the mood in the community is still good. Of course, a lot of projects are struggling, but the support in the ecosystem and the builder ecosystem themselves is very strong. The Solana Foundation is supporting the builders quite heavily and is doing everything they can to keep projects alive and keep projects going. So I would say the good projects will still survive and still go on and still raise funds. I think that's very important to say that the good projects are still getting institutional backups. And for them, maybe it's also like a cleansing of the market, that only like the very good projects that can accumulate users, really benefit the users, that they will stay, and I think they will also, after this whole bear market is over, will exponentially grow. That's my stance on the Solana ecosystem as a whole.
And so you would see that not too much damage was being created through the FTX debacle?
I mean, the damage is insane. It's actually just really, really hard to measure the damage. I think the damage, we can only really actually get to understand it, I think, in maybe 2 to 3 months. I think there's still much damage to unfold. There's still waves going through the market. But I think the damage didn't hurt the community itself. I mean, it hurt the prices of different projects. It destroyed different projects. But I think the community is still active and alive. And so to speak, maybe it's a two-sided sword. Maybe it's good FTX crash now. And basically the whole scam mess, how you want to call it, was basically shown to the world. But I think the good part is that still like one of the biggest use cases you can have for DeFi. This whole debacle. I think that's a good way to go on. It's at least maybe now a longer way, a harder way for mass adoption, but I think it's the only way to go now in crypto.
Yeah, I think that's pretty clear. So we will just need more time until people start building again. And maybe Clara, what's your observation about DeFi? You are monitoring trading volumes from exchanges. You told us centralized exchanges and also decentralized exchanges. Where do you think that trading will flow in the future? I think we should always keep in mind that new money comes into this ecosystem, typically via Bitcoin, via Ethereum, by people who have not invested yet. And this money typically comes in via centralized exchanges, right? And then that's my the way I understood it, then money trickles down into other tokens, into other systems, into other exchanges. Then it trickles down into decentralized ecosystems and so on. But very often, like the first euro being spent by an investor comes in via a local centralized exchange, as we in Germany have here, Bison by Börse Stuttgart, for example, or Coinbase, right? That's how I understood it, but I might be wrong. Clara, what's your opinion?
That's exactly. Centralized exchanges have always been what's called a fiat on-ramp. It's the way for you to enter cryptocurrency markets. And today there aren't really many other ways to enter crypto markets beyond making an account on a centralized exchange, where you can use dollars, euros, or any foreign currency to buy cryptocurrencies. And then from there, you make transfers to whatever DeFi services you want, or whether it's other cryptocurrency exchanges that don't necessarily let you use the US dollar. For example, oftentimes in the United States, to onboard into crypto, someone would make an account on Coinbase, and then to trade a wider variety of crypto assets, you would then transfer that crypto to Binance, which doesn't have a US dollar trading pair. And so I think with DeFi, the flows will there will probably be a migration of volume towards DEXs, but at the end of the day, we still need fiat on-ramps. So the question, I guess the million-dollar question, is whether centralized exchanges will find a way back, but it will be regulated, which I think definitely needs to be the case. You can only really have regulated CeFi at this point. There's no way really to get around it while also protecting the consumer. So will the consumer stay on these regulated CeFi platforms, or will they just use it as a way to onboard into crypto and then migrate to decentralized finance platforms? So I think it's this conflict between regulation and decentralization. Is the future will incorporate both, but to which degree?
Yeah, maybe I can jump in here, Clara, because that's what we do, right? So we saw that coming. We saw that coming more than 1 year back, that could be a rise again, that people do not want to go through central exchanges. They want to buy crypto and have it directly on their non-custodial wallets. And that's what we really currently see from the customers. They really don't want to go through central exchanges. It's very slow, right? So you need to register somewhere on the SEX, you have to do KYC with them, you have to trade it by your own. So I guess that's really, if you ease this process, adoption will follow, I guess. And yeah, in the current market situation, and fiat to crypto on-ramp without having the funds on a custodian could be a pretty big deal.
Maybe just 1 or 2 points here to add. So to Clara's point, I think the question is not about the extent of CeFi regulation. I mean, as soon as you are dealing with fiat money in any sense, it's regulated anyway, right? So the question is rather to what degree do we regulate DeFi here? And due to your question, Philip, because you ask us to separate between retail and institutional investors, I think the situation right now is that, especially on the institutional side, that we don't have sufficient regulation here. Even the current MiCA regulation left out the DeFi part, right? I mean, I think I have in mind that they want to suggest a regulation for DeFi in 2023, but I mean, that we get institutional investors into the DeFi space, they need a regulatory framework where they can feel safe, where they feel just where they just can invest in, right? So that they have a clear regulatory framework here, where they are allowed to invest, and where they actually also can store customer funds.
Do you think that DeFi applications will become more usable? Because in case you, well, including self-custody, you know, MetaMask, for those people who understood it, is fascinating. It's very nicely done. But of course, for beginners, it's difficult to understand, difficult to use. It could be improved here and there, right? Do you think that we come to an era where these decentralized custody solutions, including MetaMask and so on, become somehow better, more easily usable, such that people have lesser difficulties actually applying it?
I think you're asking the $1 trillion question here, because this is the way we need to go as an industry, right? If we want to achieve mass adoption, we really need to develop and create a bulletproof UI and UX for the retail investor, right? In the end, it should be nothing else like you're using your online banking, and that's the way to go. So, I mean, MetaMask is great. The functionalities of MetaMask are great. But in my opinion, MetaMask is still lacking of a very good and intuitive UI and UX so that anybody can use it. Because we need to think about it. If we want to have like as many people as possible using wallets like MetaMask or the DFX wallet, we need to be aware that there's actually no support if anything goes wrong, right? So it really need to be bulletproof, that anyone is able and capable to use it.
Yeah, but this is the point. Maybe it should really everybody be able to use it, because sometimes you would first like to ask people to really understand a couple of things such that they can use it. Otherwise, they are like naively trusting the technology, which can be very dangerous for them. Maybe you have to have a sufficient degree of knowledge to really use these self-custody solutions. And therefore, in the beginning, centralized exchange, centralized on-ramp, off-ramp is better, right? And then only once people have understood it, then it can trickle down to self-hosting solution. Does this make sense? Or would we like to have more intuitive self-custody solutions at the risk of naive people joining and then also losing money due to fraudsters?
I guess it totally makes sense, Philip. But I really think we have to start earlier. We have to educate better. So we have to educate better why there is crypto, why there is Bitcoin. I guess we should start there. And yeah, I totally agree. I also think that a lot of people now, with all this pressure to put your funds out of sexes or whatever, some people will lose their funds because they cannot handle their seed phrases, or I don't know, they take pictures of that or whatever. There are very funny memes out there on Twitter. But I guess we have to start educating better and to explain people why there is crypto and why there should be, everybody should care about their funds themselves.
Yeah, true. Perfect. So let's next talk about where we will grow from here, including also the question is basically the widespread adoption of being your own bank. Is this still a nice narrative? Is it a better narrative than ever? Is it a worse narrative? So where will we grow from here, say, in the next 12 months, maybe also in the next 24 months? Who wants to give it a start? Julian, would you like to get started?
Yeah, thank you so much. So basically, I think, like I already mentioned, we had a very, very bad market sentiment at the moment. So from my conclusion, the only way we can go now is going up and going to more regulatory and more mass adoption. Like I already mentioned, through education, through maybe base groundwork to explain crypto to the average user, the average customer. So regarding the whole growth of our industry in the next 12 months, I think we still have to handle the effects we had to FTX, but I think in the next 12 months, we are definitely, hopefully, back in the growth market. That's my personal stance on the situation.
Yeah, anybody else?
So I'm not sure if we will grow or how much we can grow in the next 12 months because so trust has to be established again. But I really think the whole industry has to work on transparency. They have to work on ease the process. So really think the customer journey of an investor to ease everything up so that everybody can use crypto and DeFi. And I guess then there will be a big run-up where DeFi will shine again.
When exactly? What would you guess?
That's really hard to guess.
Yeah.
It can be sooner than later, right? I'm not sure. I really think that with the next halving from Bitcoin, there of course will be again some strength in the markets. And of course, that will also apply to DeFi protocols, to the coins down there. And yeah, so I think 2024 could be a great year for crypto.
Yeah, so
I would agree. Yeah, Jonas, please.
Oh, sorry. Yeah, I think it really depends how Bitcoin develops over the next couple of months. So considering like the Bitcoin halvings and the Bitcoin halving cycle, if you believe in that, like we see like the bottom like 1 year or maybe a little bit more like after the previous all-time high, right? So if you consider like the last Bitcoin halving cycles. So we should approach now some bottom here, if you believe in those Bitcoin halving cycles. And then from now on, we are approaching a next bull cycle here. I'm not sure if we will follow this Bitcoin halving cycles. And in my opinion, it really comes down to the question or to the situation at Genesis Trading, right? I mean, Genesis Trading, one of the largest players in the market, when they will go bankrupt, I don't know what will happen then. But if they are able to recover, I think we could keep this Bitcoin halving cycles, and we might approach then the bottom soon, and after that, another rally might start. And then DeFi will follow. So I can't think of any scenario here where DeFi leads the rally here. I think it really depends on how Bitcoin develops over the next couple of months.
And I guess to add on to that, I know most people in DeFi don't really like the idea of permission DeFi, but there are some really interesting experiments going on in the traditional financial world. A couple of weeks ago, JP Morgan, they conducted the first tokenized transaction on Polygon, which is an Ethereum layer 2. And so while they did do it in partnership with Aave's permissioned DeFi offering, it still shows that there is a use case for decentralized technology within a traditional financial space. While we may not get anytime soon the fully decentralized version of this, I think it's interesting that these TradFi institutions are still very much investing in the tokenization of existing assets.
Interesting point. Actually, concerning Bitcoin, I would also say that we have to really acknowledge that Bitcoin is basically the largest and most important asset out there. That's where money comes in. That's where it trickles down from. Bitcoin wasn't the trigger of all the crises and the crash situations, right? It accompanied all the crises, of course. And now that Bitcoin miners have to sell some of their Bitcoin to refund their electricity bills, we now see that Bitcoin is also sold by miners, damping the price, of course. But my impression is still that it all depends on the Bitcoin sentiment, right? That's crazy news. But that's my feeling after observing this space for a couple of years. We have one question coming up from the audience, and this would be that it's a fun question concerning the UI. Do you really think that online banking is really delivering a great user experience when you look at large banks?
No, definitely not. That's why I'm working in the crypto space. But it's a way to go, right, to do your banking nowadays. And I mean, with all the neobanks, like, I don't know, N26 and so on, Republic, not Republic, but Revolut and so on, they made it quite simple and easy, to be honest. And I think that's the standard as of now to do banking nowadays. And no, I don't think that it's a great customer experience here, but most people are familiar with those settings.
Perfect. You know, to be honest, the more easy you make the customer, the user interface, the higher is the risk that people are trusting this and just spending their money without thinking what they are doing, right? So it's not that clear, but I would also agree that we have made a major advancement with, especially with online banking apps, which are allowing the two-factor authentication to be better done, like the traditional banks with sending you SMS style, like in the 90s or the 2000 years, right? So therefore, yes, it can be better, but I think it's also improving year by year. Let's make a last round of question. What does it take from now on to grow? Is it more regulation? Is it less regulation? Is it more education? Is it, I don't know, more funds by larger banks? Is it more entrepreneurial startups? What does it take to grow? Or maybe just time, you know, maybe we are too less hesitant and we just have to wait for half an hour until the dust settles. Jonas, please start.
Sure, of course. Yeah, I think all of your points are valid here. So we need to work on the education. Custodial services need to improve. So really improving the transparency here, that customers can look into their funds on custodial services anytime. And I think then it just takes time, right? I mean, we have seen it before. We have those bear markets, we have those bull markets. And I mean, and then we still need to consider like the entire global situation right now, right? With all the supply chain crisis, the entire markets are basically down. And I feel like the DeFi can still generate value in those times. And it's one of the assets that still like can deliver some sort of return here. And yeah, just tell me one other asset that is able to deliver those returns in such market environments. So yes, the dust needs to settle now. We need to rebuild a lot of things. Custodial services need to become way more transparent, and we need to educate.
Perfect, excellent. Who's next, Julian?
Yes, I go ahead. So like I already mentioned a couple of times, I think education is one of the key parts. I think that's the most fundamental problem we have to tackle, like how to educate the regular user, how to protect the regular user from everything that happened in the past. And I think that's why it's very, very important to have these programs like DeFi Times from Frankfurt School, and to support these programs and to participate in these programs to really reach a large audience of people, and to get more and more people involved themselves, and more and more people like also self-education. I mean, education, crypto is never stopping. Crypto is always evolving. Every week, every 2 weeks, there's a new trend coming around, new stuff happening. So people have to really engage with the technology and really understand it, and always continue to self-educating themselves. It's not like it's done one time, then it's fine, and then you understand everything. I think to go along with the technology and be part of it, and not be the backholder like so many retail investors have been in the past with different projects, different stuff that happened. I think education and self-education is most important from my personal point of view.
I agree. Yeah. Clara, and then finally, Ollie.
Yep. So I think that regulation of CeFi is almost inevitable at this point. And it's definitely what the industry needs. There's no denying that there needs to be more transparency and oversight over what these CeFi crypto services are doing. However, I think that just more transparency in general, which is only really possible with DeFi, is the only way to sort of prove the worth of the entire crypto industry. So the CeFi services, they're going to remain. I think that's one of just the ways that most people can access crypto, and probably will be for a very long time. So those should be regulated. But hopefully we see more people realizing that CeFi is not the optimal way to engage with crypto, that it should always just be DeFi once you onboard.
I guess I cannot add a lot here. So it's all about transparency. It's all about education, and really to just pave the way for easy access to DeFi protocols.
Perfect. But then to summarize, also now approaching Christmas in a month, right? And then the end of the year, apparently we are all optimistic, right?
Sure. So
Definitely.
I am, at least.
Yeah, that sounds good. You know, no depression here. Perfect. Thanks much for the very nice round and the very nice discussion. I also learned a lot. Let's do this again, maybe in Q1 next year, similar topic. And with this, thanks for being here. Thanks for everybody listening. And let's push through the year, and next year should be better. Thanks.
Great.
Yeah, thank you very much.
Thank you.
Bye.
Bye.